All right, guys. Welcome to the Real Estate Hustlers podcast. I'm your host, Josh Appleman, the founder and CEO of Appleman Properties. Today, we have my friend Sergio Pejoves, sorry, the founder of Worth Avenue Capital Group out of Palm Beach, Florida. Sergio, if you could, please tell everyone a little bit about yourself and where you are in your current real estate investing career.
How are you doing, Josh? Thanks
Doing
for
good.
inviting me to your show, man. I remember meeting you in Miami. When was that? Is that early this year we met?
Uh,
But that was the
Last
second
year, but
time, right?
yeah, it's been a while. MFIN Summit, multifamily.
Yeah. That was a good event. Connecting with people, old people and new people. So I think it's very important. We'll talk about like the importance of networking throughout your show. I believe there's a couple of questions regarding how to grow, and one of the key elements is growing with through networking, collaborating with others. So
Yeah.
well, long story. I know we're gonna have enough time to talk about me, or what's my experience in real estate. But I've been involved in real estate for the last 22 years. I started in the mortgage business, worked with my brother back in 1999, all the way to 2006 or seven when the market crashed. So I was that subprime guy doing loans for people that have challenges with the credit. I was very creative, and I think that helped me a lot getting into the real estate side of the business. But I mean, I don't have any record that I know of any foreclosure, so I think there's a good track record there that I know of. That was very wild back at the time, as you remember. All those very flexible loans and subprime loans. And it helped a lot of people, but also a lot of people took advantages. A lot of investors, for example, bought a lot of NOO, not owner occupying loans, and you can get leverage up to even 100%. That was just ridiculous. It was so too flexible, and there was a lot of investors buying multiple rental properties, and when the market crashed, they have these adjustable rates. So what's going to happen? You can't cash flow anymore.
Yeah.
So there was a lot of that back at that time. So in 2008, I decided to move into the real estate business. There was a lot of foreclosure opportunities because of the meltdown, and I started doing some fix and flips in Houston. I started in El Paso when I was doing the mortgages, and then I moved to Houston in 2006, and then the market again crashed in 2007, 2008, and I knew there was a lot of opportunity to get into the flipping business. So I started buying fixer-uppers, the suburbs of Houston. I did an average of 15 to 20 flips a year. It was a solo operation. It was a lot of work, and it was very profitable. I was buying, suburban homes that you can pick them up for, I remember, $50,000. You put $20,000 on repairs, and then you would sell them for 110,000, 120,000 per pop. So, but there was a lot of work, a lot of learning. If I were to advise a new investor, that wants to get into real estate, definitely fix and flip is your ABC of learning real estate. Now, it doesn't mean that you cannot get into commercial, and get into the big numbers and the big deals. But
As far as
I
like
think
learning the process, you're saying, like the fix and flip's a small deal.
yeah, I think you learn how to buy right, and I think when it comes to real estate, if you buy right, you make the money when you buy. Don't they say that,
That's
Josh?
true. Absolutely,
You know
100%. You're making money on the buy, 100%.
exactly. So it learns you, and you can make mistakes. Learn from those mistakes. When you are, you do a large deal where you syndicate or you are taking money from other people, then there's a higher level of responsibility, and you cannot allow yourself to have mistakes because you're dealing with other people's money, and that's very serious. So if you do fix and flip, you are most likely coming yourself in leverage to like a hard money lender probably, and you don't need multiple partners to do that. You can really start on your own.
How would
So
they start on their own with that? What would be
I'm
some
sorry.
ways?
I'm sorry.
What would be some ways of them starting on their own?
What would be the ways to start?
On their own, yes.
On their own, I think fix and flip, definitely. Also, another strategy is wholesaling. I mean, I've seen some people wholesaling even apartment complexes. They're a little bit more sophisticated. You have to have a little bit more muscle when it comes to earnest money because you have to put those deposits. Again, you can also use some partners to help you with your earnest money, but there's just a lot of moving parts. There's a lot of, costly due diligence, attorney's fees. But, you can start on the single family side. You can start with the fix and flip and the wholesaling. Actually, I had a wholesale division when I was doing the fix and flips called Houston Flippers.
Yeah.
And we will wholesale a lot of properties to investors, because there's so many properties that I could do on my own. So I have a lot of leads, and I said, I'm not going to go waste these leads. So I was just trying to build my website, tell everybody what I was doing, that I was wholesaling properties as well. And I was bringing a lot of value to investors. And I was connecting, you start connecting.
Yeah.
And that was a good run. Then I did that all the way to 2012. And in 2012, I decided that I didn't want to be, doing all these, little flips in the suburbs. I wanted to go to the big leagues, and start doing high-end construction and remodeling on the high end. So less volume, more capital, more gains per se, And I founded a project Bungalows, which was a boutique development in Houston Heights area. And another area was called Brooksmith. And I did a lot of boutique development, craftsman homes, high-end rehabs, and it was very successful. I'm very proud of that era of my experience so far. And with all those gains that I was getting from the flips, I was start to buying real estate, start buying rental properties. So, I mean, I think it's a good advice to your audience. You're starting real estate and you start making money. Put those capitals into rental income so you can benefit from that.
So you would say wholesaling, fixing and flipping, make the transactions, but then in turn reinvest that capital back into buying and holding. That way you've got a reoccurring revenue coming in every month versus
correct.
Transactional. Got it.
Yeah, exactly. Start looking for opportunities, and maybe the properties that you are looking to wholesale or fix and flip, you may say, you know what, I'm going to keep it as a rental. So, all your marketing efforts, now you have all these different channels of business, right? Different streams. You have your fix and flip, you have your wholesaling, now you have your rental portfolio. And before you know it, you are like, a machine, doing all these different streams, and before you know it, you want to realize, okay, what's next? And that's the beauty about real estate, because it's very addicting, and there's always a path of growing. And the more you learn, the more confidence that you are into getting into bigger profit projects.
Yeah. How many single family houses do you have in your portfolio?
None.
Got it. And why is that?
I have one right now, actually, but it's a high-end $1 million deal rehab. So once in a while, I get into those larger projects because, I have now the capacity and the experience to tackle, for example, this property that I just bought near my neighborhood. Actually, I'm very familiar with the area, of course, because, it's where I live. And, we picked it up from, $1 million, and we're putting $500,000, and we're going to probably resell it in the high twos. So, but I wouldn't recommend that to be done by somebody that just want to wake up one day and say, hey, I want to start doing, flipping. I wouldn't recommend that, but I think the experience allows you to, down the line, you can get into those bigger projects and be fearless. So that's the only one, kind of like a side project, just for fun, because I really enjoyed, the designing part of the developing aspects of the business. But other than that, I sold all my single family rentals. I actually bought close to 200 units in Wisconsin, and I sold the entire portfolio because I wanted to focus in multifamily. Yeah. That's really the next level when it comes to real estate investing. And it's just hard. It's just hard. When you start your new portfolio, it's good to have it. Don't get me wrong. But there's a point where you decide, where you're asking yourself, okay, am I going to continue buying more rental single family homes, or am I going to try to compress that into one big roof with multiple units?
Yeah.
And it was just a lot of challenges here in the office, because we manage our own assets here in house, and managing close to 200 units, where all the houses are in different locations. You lose your hair, put it that way. I lost some hair, but you lose your hair.
And your CapEx, I mean, it goes up with your plumbing, your roofs, your just all of the maintenance requests that comes into a single family house compared to an apartment complex is astronomically different.
Yeah, yeah. It was very managed intense, and I believe that once your best commodity is your time.
Hmm.
So if
Yeah.
you are really not much time left, and you are continuously stressing, and I know you can have your property manager to help you, but we didn't have actually a good management company, and we changed it towards the end of our holding. But we can talk about that later. Then it requires really a lot of efforts on your end, and I didn't want to go that path.
Yeah.
I didn't want to go that path. I didn't have to, so I just stabilized what I had, and I decided I'm gonna sell off everything by the end of 2021. I want to own nothing about single family rentals.
Yeah. No, and your point about property management, tell people it's buying a business. When you're buying a rental, a piece of property, and you've got someone in there that's paying the bills, essentially, that's buying a business. It's got a full-on P&L. And
Yeah,
property management, you've got to know when people are performing or not performing, and knowing when to cut those ties. And if they're not performing, you got to have those difficult, uncomfortable conversations, and
yeah,
make sure your business is operating like it should for the betterment of the tenants too.
exactly.
Um,
Couldn't agree more.
good points. I want to get into a couple questions here. So how did you get started in real estate? We went over that. What was your biggest lesson that you've learned?
So far in my career, the biggest lesson, you just have to put offers out there. And there were just a few instances that I hesitated, and I didn't take action. And I'm very active guy when it comes to real estate. But I think that one of the most important thing is really engage. I think the more offers, the more LOIs you submit, the higher chances that you have to getting into a deal.
Yeah. What is an LOI for for
LOI
the
is a
audience?
letter of intent. And I remember I had actually a positive experience, by taking action. It's like we were my broker presented me an opportunity, and this seller didn't want to budge, didn't want to, pretty much ignoring us, and we just started it at I think that we started at $3 million, and then we worked our way up, and it took us almost 6-7 months to get to the seller to agree to a yes, and we went all the way to $5 million, but it was just a complete home run deal anyways. But I mean, it just took time. It just took time. If we would have not engaged in the first place, and we wouldn't know, I wouldn't own this asset right now, and the potential that I have. So I think just taking action is very important.
Yeah, so submitting LOIs, letter of intent, non-binding, but at least it gets the word out that you're interested in the property. You've made an offer, you've broken the ice. So now they can come back and make an offer or counter the offer. And that's what you did to buy your other property, correct?
Correct.
It's back and forth and
Always back and forth, and and negotiations. There's always this question, right? What is first, the deal or the money? The money, the capital, or the deal? I think for what I've experienced so far, once the deal, the deal is a deal, it's a home run. Checks all the boxes, right? Finding the counterpart, the capital aspect of it. I think that's just secondary.
yeah.
It's important, but I think that the money kind of like just comes if the deal is juicy. So
Absolutely.
for people out there that are always kind of wondering, because it happens to us too, it's like we come across a lot of opportunities and we're like, oh, look at this race, it's significant, and we may have the right connection, but we may feel like we're not there yet. I think that actually we are right now under an LOI on a large deal. I haven't disclosed that to the world because we're still on the PSA negotiations, but I'm very excited about this opportunity.
Yeah.
And this is the first deal in my career where I have to use other people's money that I already got the money before the PSA.
So that you're doing a full-on syndication?
No, I'm not doing a syndication. It's a joint venture.
Joint venture. Okay. All right. That's
so
good.
it's for people out there that joint venture is when one or two or three people, I mean, more than one, but two or three, people get together and they collaborate towards, a single business goal versus, on a syndication, right? You have your sponsor team, the lead team, and then you raise capital from, passive investors, and they don't have much really say on the daily operations of the business. They pretty much park their capital. On this instant, we were able to raise close to $4.5 million.
Wow.
From a single investor that is gonna come in with us jointly on this deal. And we don't even have the PSA signed yet, and the capital is already raised. That's the beauty about real estate. Now the deal is extremely good. I mean, it's one of those deals that only comes once in a blue moon, or I mean, for us, it's been luckily every 12 months, it seems that we have a home run deal. And we're very, very, very proud of it. We'll reveal, more information, once we have the PSA. I don't want to jinx it, right?
That's perfect.
I want to make sure that all goes good, but I'm very excited for that. And I guess that's a good example about LOI. If I would not come across, send the LOI, and I would hesitate, I wouldn't get to a position that I'm right now, to where I'm very close to get a PSA agreed.
Is that off market or on market?
Off market.
Okay.
And
what does that mean for the audience?
Well, off market is properties that are not listed on the MLS. They are pretty much not out there. They are not in any listing, LoopNet, Realtor.com, Zillow, or any platform. It's pretty much property that is being offered outside the mainstream platforms. And those are the deals that you really want to get your hands on, because those are the deals that are really cooked kind of like on the back end. Some deals may not even be listed with a broker if you're working with a broker, but at least the broker has knowledge that there's an opportunity, circling around, and that's when everything kind of like joins together. And the beauty about those deals is that you just don't have competition. Right? It's just you, the seller, or a broker. And there's just no more eyes. And this is how this opportunity came. It's not listed. It's not even for sale. But the broker actually the broker sold the portfolio to the owner in record right now. And he was all, brokers are always coming back to you, right? After a year or two of your holdings. And
if you can close, they'll come back. If they know you're a closer, they will absolutely come back to you.
Exactly. So I called the broker for a piece of land, because I'm also looking for development. And he said that land is taken, is under contract. But hey, I got a seller that I sold, a large piece of property a couple of years ago. I've been talking to him lately about selling, maybe there's something there I can do for you. I said, yeah, absolutely.
That's
so
awesome.
He came back next day and said, yeah, I mean, you give me XYZ. I mean, I think they wanted $12.5 million for the deal. And I said, okay, let's get to work. And, the next day, we're like, let's underwrite this thing quick, let's get it. Let's find out what's the opportunity. So we were able to kind of like put this, streamline the process. We have an in-house underwriter here at the office. And toward the end of the day, we send the LOI, and the negotiations starts right after. So that was exciting.
That is exciting. Congratulations. That's going to be a big project for you. It's going to be great.
Yeah.
So if you were to start over in real estate, would you get started the same way?
Absolutely. Yes. I think, it's all about the track record. Mm-hmm. Sometimes you get these brokers asking you, send me the proof of funds. Hello. I mean, we're buying a $20 million deal. Am I going to give you a $20 million proof of funds? I mean, nobody does that.
What does that mean when a broker asks for a proof of funds on
Well, pretty much it tells you, they just want to filter you. They just want to know whether you know your craft or not. When a broker asks you for proof of funds, you say, hey, I'm not going to give you a $20 million, or if it's $5 million proof of funds, I'm going to send you my track record. Go to my website. I want to send you some references, or just have a deep conversation as to who you are, what you have done, and how confident you are on taking the project. That's your proof of funds right there, your track record. Now, Josh, for your audience, you want me to, I can also send them my bio, which is very extensive, very nice. They can I wouldn't say copy because we design it here, but they can use the layout, or they can just be inspired by the document because it's very impressive.
So
And,
in the description, the live description, your bio is in there, so everyone's
yeah,
got
but this is
access
like a digital version.
Okay, perfect. That's perfect. If we
It's
could,
it's like a PowerPoint presentation
yeah,
where it shows who I am, everything, my portfolio, my experience, everything, the whole story about my company and myself. And I think that's very powerful tool, because once I got brokers call me saying, "Oh my God, I love your presentation."
yeah, I like that a lot. If I could get that, I'll upload it into the group,
Yeah.
Real Estate Hustlers Facebook group. I'll upload it in there. That way, it's a free resource. I've got other documents in there too. That's huge. That helps them get kicked off.
Yeah, I think that's that's your proof of funds right there, Josh. What have you done? What's your track record? And even if you just started like 2-3 years into the business, still showcase your work.
Yeah.
Showcase your work.
Totally agree with that. Yeah. Just pump it out. Let people know what you're doing. And you kind of create a little campfire around yourself. You're showing people what you're doing, how you're doing it. It's, you are who you say you are. It's huge.
Yeah.
All right. Let me
happy to share, Josh.
Why should investors be interested in multifamily as opposed to single family commercial? Or sorry, as opposed to single family or commercial flipping or other forms of real estate?
Just a couple of, I guess we just discussed, right? Just it's more managed in 10 single family homes versus when you are, you own multifamily, you're really, yes, you have to oversee the asset itself, but really you are concentrating your efforts on the management, on the project manager team. So instead of you dealing with individual units, you're talking at a higher level position. Yeah. So that requires less time, and I say time is money, right? So that's one reason why I would do multifamily instead of single family. Another one is when it comes to valuation, and I think right now with this environment, right, where prices are starting to fluctuate. If you have a flip in your neighborhood and the guy next door, same property, is more motivated than you because they may got into a bad loan or something, or somebody loses their job and they have to make a very, very drastic price reduction, then all of a sudden, your flip, instead of being worth, I don't know, 250, now it's worth 175 because comparables around you, all of a sudden, they adjust the pricing because of fear or other factors. So you really don't have much control. Doesn't matter if you put a gold faucet, doesn't really matter what finishes you do, because your value is related to the comparables that are in the neighborhood, around you. Now in the multifamily space is different. The asset itself is what it creates the value. So if you increase your rents because you are making improvements in the property, you're decreasing your expenses, you're increasing your NOI, automatically it's going to reflect on the valuation of your property. So you have control of doing this, what is called forced appreciation. Mm-hmm. You are in control on operating the property in its best shape. And that's going to result on a higher valuation versus, doing poor. So you have control of how much your property is worth versus in the single family, you are dependent on others. So that's the beauty. That's the beauty of multifamily. It's more scalable also, and you can find a home run. It's all about finding home runs.
Yeah, you
want to find a good deal, because I also seen people, getting into multifamily opportunities, and they're not conservative with their underwriting, and then when there's a shift, they also are hurt. Yeah. So you just have to know what you're doing, study, educate yourself, and make sure that whatever you're doing is going to benefit the opportunity.
Yeah, be very diligent. What's your take on Blackstone buying up all the houses they can possibly buy?
I know. It is crazy. I think that we are in a housing crisis, Josh. I don't care about interest. I care about interest, right? But really, at the end of the day, there is just a lack of supply. There's just no new builds. There's new construction. There's just so much needed housing. So of course, a big corporation like them, they're gonna go and like a big monster just take over because they know there's just no supply. So I think they're very smart by doing that. Now it does require a lot of operations, a lot of
Oh yeah.
It's a big task, just buying single family mine from a big corporation. But if you got the right teams and the right structures, I'm sure that they will do very good. I think it's a very, very wise move. Now, it doesn't help the average Joe, that wants to buy a house, really is taking the inventory out of the pool of market. So yeah, it is hurting the average American for a big corporation to come and buy a bunch of single family homes. Yeah, it does hurt, but I mean, we live in America, right? It's capitalism.
Well, and another point on Blackstone, I think that their strategy is the office space is the new home.
Yeah.
So essentially, office space has plummeted ever since the COVID. So now their strategy is every house that's where the new office space is too.
Correct.
So
that's a good point.
What that looks like here within the years to come, I have no idea, but I know that is why they're very aggressively buying and however they're going to manage it, whatever that's going to look like. I mean, it could be, you've seen what happened with Zillow. It's usually it's harder to move big conglomerates around, but I'm sure they'll figure out a way.
Exactly. Well, we'll see how that goes,
Yeah, absolutely. And I'm sure we will. It'll be a part of it. So how does a beginner investor get started in multifamily real estate without prior experience, networking connections, or capital? What should they be focused on first? And is it possible? So I know we touched on this in the beginning, but I think that this is like one of the thriving questions of what they want to know. Like, how can they possibly get in there? And let's double tap on that question.
Yeah, I think that if you were to throw me in the streets right now with no money, no knowledge, right? And I have to make a decision. I think the decision first needs to be made. If this is for me, you have to do like a self-commitment. Do I want to embark in this business? Am I going to be a chef? Am I going to be, a doctor? Whatever you want to be. You just have to put your head around and say, I'm committing to this. I think that's your first step. Really make a commitment. You have to breathe, eat,
totally agree.
Talk, everything real estate. You have to consume real estate like if you are addicted to the matter. So that's your first thing. You may not have capital connections or nothing, but a decision needs to be made first. So if the decision is made first and you are truly committed to getting into real estate, I have no doubt that you'll be successful. No doubt about it. But you have to be obsessed about it. And obsession starts with knowledge. Why am I obsessed of this? So first thing, knowledge. If you have no money, no nothing, go, to your public library, get educated in real estate, learn, go read books about real estate. Also read about others being successful doing real estate. Not just a theory, that is important, give you some framework, but also have others have achieved, success in real estate. And I'm not going to say copy them, but definitely be inspired and see, okay, out of all these strategies, which strategy would fit me the best? What is me in relationship to all this? Am I more introverted? Okay, maybe I can be more analytical and find a partner that can be more extroverted and talking to sellers and engage and this and that. Or maybe I'm the one that is extroverted. Well, I'm going to be on the phone 24/7. I mean, you need to put the word out of what you're doing. Otherwise, how people know what you're doing? Yeah. And that's what it's all real estate is connections. If I would have not met this broker over the phone and I invested 2 minutes of my time, I wouldn't have known about this portfolio that I'm about to buy.
Absolutely.
So it just comes with the action. So I would say, educate yourself and network. There's so many groups out there, right, Josh, that you go, even for free meetups. I think now the conferences are costing money. So you're starting and you don't have capital. Maybe the conferences are not for you. Just go to your local meetups. They book these little bars, whatever. They congregate 10, 15 people. Be that guy. Yeah. Support that guy that is doing that event. Hang out with that guy. Buy him a beer or say, hey, how can I help you? Devote your time to that guy. I say, maybe you need some assistance, but you don't have capital to put somebody on payroll. Maybe I can help you a couple of hours. I can learn how to underwrite and give my time for you. Just give value to others. And then people reciprocate, always reciprocate. So that's how I would get started, Josh.
Yep. Confidence comes from competence, learning and learning the industry. That's huge. That's a good point. All right. So what signs do you always look for when you're trying to find that home run real estate deal?
First sign, motivation. There has to be some level of motivation from the seller. And I always look for properties that are underperforming, that are not performing to its max. If you buy properties that are already, remodeled, right, that are already, they already look pretty, then most likely there's not much meat on the bone there. I'm not saying for you to go to war zones and find depleted property. I mean, although there's some stories of success deals, dealing with that kind of, portfolios. I have some of those properties, I'm not going to be embarrassed by that. It was a lot of work, but it was profitable, but it requires a lot of risk. But I would say, that, yeah.
Got it. Awesome. Very good. Okay. And then finally, how do you see the market affecting real estate right now? And is now a good time to get started?
I think it's a great time to get started. A lot of people say, oh, you want to wait until the market improves, the interest rates go up or down. In the meantime, you lost a bunch of deals.
Yeah.
The sharks are getting the deals where you are, scared in the corner waiting for the market to get better. Go there, just be conservative on your underwriting, build relationship, put the deal together and make things happen. But there's opportunities every day. Right now, I think there's even more opportunity because of the fear. Not only buyers get fear about making a move, also sellers get scared. They get a fear factor into what's going to happen. So then there's a level of motivation right there on the seller. So there's always time to buy real estate, as you know, George, in the ups or the downs. So I would say just take action. Don't wait until that perfect time. Until that perfect time happens, maybe 2 years has passed and you could have accumulated so much wealth in between.
Totally agree. Don't wait to buy and wait.
Exactly.
I'd appreciate. And then as far as like even purchasing, I'll add to it, just have multiple exit strategies. If you're buying the house to flip it, it doesn't sell or can't sell, then maybe you put it out there for a rental until the market turns back around, or just different exit strategies.
Yeah, you have to have your plan B always. A plan A, plan B, of course.
100%. So how can people get a hold of you if they want to reach out?
So they can just go to my website. I think that my website shows, all my story, what we're doing. They can book me there. We can do one-on-one. Talk about real estate. There's no cost, no nothing. If you want to ask me any questions, you want to be coachable, I can also answer some questions there. So just, book me on one-on-one, or if you want to invest in real estate and you want to invest passively and, come along with me on bigger opportunities, you can also book me there on their passive investment one-on-one, on my calendar. So my calendar is there, it's open. You book me, boom, you'll see me.
Okay, what is your website address?
WorthAvenueCapitalGroup.com.
WorthAvenueCapitalGroup.com. Sergio, definitely appreciate you being on here. Ton of knowledge, ton of wealth. You're going to be, you're constantly doing deals. I love seeing you, what all you're doing out there. It's huge. So look forward to seeing what else you got going on too.
Sounds good, George. First, thanks for inviting me to your show and look forward to connect again, man. Thank you for the opportunity.
Yes, sir. Thank you.
Thank you. Bye-bye.